This video is review of Toyota's FY 2024 financial results. Toyota Motor Corporation is a Japanese multinational automotive manufacturer. Toyota is one of the largest automobile manufacturers in the world, known for producing a wide range of vehicles including sedans, SUVs, trucks, hybrids, and electric vehicles. The company is recognized for its commitment to quality, reliability, and innovation, particularly in hybrid technology, exemplified by the Toyota Prius. Toyota also operates the luxury vehicle brand Lexus. Its production system, known as the Toyota Production System, is renowned for its efficiency and influence on global manufacturing practices. Consolidated vehicle sales. Consolidated vehicle sales for this fiscal year was at 9,443,000 units, which was 107% of consolidated vehicle sales for the previous fiscal year. Toyota and Lexus vehicle sales were 10,309,000 units, which was 107.3% of such sales for the previous fiscal year. Sales volumes increased, except in Japan, which was affected by the suspension of shipments by Daihatsu Motor Kawasaki and Toyota Industries Corporation. Also, the sales of electrified vehicles increased, mainly hybrid electric vehicle, with electrified vehicles constituting 37% of total sales. Consolidated financial summary. Annual sales revenues is 45,095 billion yen, 121% up from previous year. Annual operating income is 5,352 billion yen, 196% up from previous year. And annual income before income taxes is 6,965 billion yen, and net income is 4,944 billion yen. Geographic operating income. By geographical region, operating income increased in many regions. Japan increased year-on-year, mainly due to an increase in exported vehicles. North America, Europe, and Asia also increased year-on-year, mainly supported by price revisions based on product competitiveness. Consolidated operating income. The factors which impacted operating income year-on-year. First, the effects of foreign exchange rates increased operating income by 685 billion yen. Cost reduction efforts outweighed the impact of soaring materials prices, resulting in an increase in operating income of 120 billion yen. Marketing efforts increased operating income by 2 trillion yen due to an increase in sales volume of mainly HEVs, improvement of sales mix due to strong sales in high-margin vehicles, and price revisions mainly in North America and Europe. An increase in expenses decreased operating income by 380 billion yen due to an increase in labor costs and investments in areas such as digitalization. As a result, excluding the overall impact of foreign exchange rates, swap valuation gains and losses, and other factors, operating income increased by 1,740 billion yen year-on-year. Dividends. Dividend policy is to increase dividends in a stable and continuous manner in order to reward long-term shareholders. The dividend for FY 2024 will be 75 yen per share, a year-on-year increase of 15 yen compared to the previous fiscal year. As a result, the total amount of annual dividends is over 1 trillion yen. Share repurchase. For share repurchases, 1 trillion yen is the maximum limit of year-end repurchase to flexible repurchase of shares, while considering factors such as the price level of common stock and to respond to requests for the sale of own shares as needed. In addition, 520 million shares will be canceled, equivalent to 2 trillion yen. FY 2025 forecast. Consolidated vehicle sales is expected to be 9,500,000 units, 100.6% of the previous fiscal year. In Japan, decrease in sales volume is expected mainly at Daihatsu. In addition, Toyota and Lexus vehicle sales are expected to reach 10,400,000 units, 100.9% of the previous fiscal year. Electrified vehicle sales is expected to be a total of 4,827,000 units, or 46.4% of total sales. FY 2025 Financial Summary. The full year consolidated financial forecast. Adopted full year foreign exchange rate assumptions is 145 yen per US dollar and 160 yen per euro. Based on this, forecasts for the full year consolidated financial performance are sales revenues of 46 trillion yen, operating income of 4 trillion 300 billion yen, income before income taxes of 5 trillion 70 billion yen, and net income of 3 trillion 570 billion yen. Even though Toyota's budget is always a conservative estimate, operating income and net income are expected to decrease for FY 2025. Electrification and competition. As the global automotive industry shifts towards electric vehicles, Toyota faces pressure to accelerate its electric vehicle development and compete with established EV manufacturers like Tesla, as well as new entrants and traditional competitors who are rapidly expanding their EV lineups. Environmental regulations. Stricter environmental regulations worldwide are pushing automakers to reduce carbon emissions and transition to cleaner energy sources. Toyota must adapt its production and product strategies to meet these regulations, which can require significant investment in new technologies and infrastructure. Toyota has been a leader in hybrid technology, but needs to switch to electric vehicles fully, eventually. There are still challenges related to battery technology, charging infrastructure, and the cost of electric vehicles itself. And it has been slower. Conclusion. For FY 2024, Toyota achieved the highest revenue and highest income, and they have been raising the dividend amount, and this time they will buy back their own shares of 1 trillion yen. However, estimated net income for next fiscal year, FY 2025, will decrease, and there are concerns about the national trend for transition to electric vehicles from combustion engines. Future exchange rates also have a significant impact on Toyota's business performance, but it is not able to be controlled. But at this point, electric vehicle sales have grown less than expected worldwide, and Toyota's hybrid sales are still expected to be strong. Overall, Toyota's FY 2024 financial results were good.